Hey traders, Greg here. So some of my videos I record questions from students or subscribers and then upload them for others to be able to take advantage of the learning. So the question was, I have a question on Pan W. We're going to take a look at the chart. It says, I see that it retraced 100% from June 1st to June 12th and is now currently moving sideways. The candle today, June 17th, appears to be a bottoming tail bar. We'll look at that. My question is, would this bottoming tail bar be worth considering a money bar? Thank you for your time, as I know it's valuable. Appreciate it. Okay, so first thing we have to do is define a money bar. This is something that I coined many years ago, and the essence of it is, let's call it a correction bar. Right? Correction bars, in the direction of the move increases the odds of follow through. Right? These are high odds continuation panels after the start of a move. So, key word here, start of the move. And I got two examples. Start of the move, wide range bar up, and continues up, suggesting it's going to continue. So when prices come out of a consolidation, and in this case it's a wide range bar igniting, right, the strength move up, it runs up a bit, and odds are it's going to pull back, correct. So it takes out a couple of bars lows and springs right back up again. And what that communicates to us, like all charts do, the beliefs, expectations about the current environment, stock, market, whatever you're looking at, and they're bidding down below. So where normally we might say, well, it should pull back to these overlapping opens and closes. That's where their bidders would be. Well, maybe. But it's very shallow when it pops right back up again. That tells us that they're bidding down there, what's called passive buyers. They're sitting on the bid if you look at a level 2. And then as they see it start moving up, they become active or aggressive buyers, taking the offer, and they drive it back up again. So the correction on a very short-term basis probably takes out some stops. And so this is an indication that it's ready to move back up again, so we buy above the highs. In this variation, it starts out with a wide range bar, igniting a move. Inside bars number 2, and 1, 2, 3 would be it just moves up. But if we can get another bar that takes out the lows and springs right back up again, that's our continuation pattern looking for a move higher. So let's take a look at Pan W. Here's Pan W. And so the question was, it moved up from June 4th. And here you see it's on this pivot. You look to the left, and expectation is, it should start to stabilize here. Let's see what it does. And then you get a bottoming tail bar, and it looks like it's ready to move back down. You get another bottoming tail bar, and then it takes out the high. And at that point, you don't know that it's going to come all the way back up here. But it did start the move off of a low here, and it retraced 100%. So it's closed the void. Someone will say, well, what's a void? Well, here they came down really hard, right, fast, and there's little to no overhead resistance. However, the move down was pretty strong. It looked like it was going to go up, and it came down real hard. And so at that point, we're just not sure whether this stabilization is just going to be, resulting in a move lower. But as this begins to reverse and we get more information, for example, like this bar right here, where it closes near the high, it should keep going up. And then from there, it's bar by bar. What's your first reference point of support? That's the prior bar's low. Here, it broke that low, actually 2 lows, and comes right back up again. Now, it's not what we define as a textbook bottoming tail bar, because the tail is less than 50% of the range, whereas you want to see it retrace more than 50% of the range. Nonetheless, it dipped down and it came back up again, so we have that part of the criteria. The bottom of this bar right there is where it found support, these overlapping bars. If we were to look at the intraday pattern, you'd see some support there. So now it's consolidating. So we have enough information to suggest if it could take out these highs, it could go up. So it has to move up, whereas the other examples that we looked at already had overcome some resistance. You didn't see it on the slide, but the assumption is there's a void above. So the question is, does this have a void above? Well, yes, it does. Now, can it clear these highs, which is now what our focus will be, right? If it can clear those highs, it could go higher. Now, as it goes sideways here, it doesn't look like it's going to go anywhere. Tomorrow's a holiday. It's probably not going to do anything. So I'm just going to set an alert on that horizontal line. I'll see if it comes up. Now, would I show this in a course as a textbook money bar setup? No, I would not. That being said, we have to start out with what is the ideal type of a setup and then move into common sense analysis, meaning, was this a positive move up? Yes. Was it a powerful move up? Yes. Not only by the retracement, but it had a wide range bar. To stall at resistance makes sense. It broke a low and sprung back up again. So sometimes it might take another day or two or three to actually absorb this supply and then eventually move up. So set the alert. Let's see what it does next week. I like the setup as a potential for a continuation pattern. As I said, I wouldn't put it in one of our courses as a money bar, but I would show it as something to say, okay, we have the ideal textbook scenario. This may not be it, but it's still positive enough to put on a watch list. A lot of what you learn over time, learning about trading and technical analysis, is at the beginning, you're focused on perfection. I won't lose any money. This is the setup. It's going to happen. And you think it's going to repeat like that forever. It's not. So once you understand the foundational information, which I've explained, then is to bring in your common sense and say, is this bullish? Is it very bullish? Is it something I should pay attention to or not? And that is what we do. Right? We look at what is textbook type of scenarios. That's how you learn from the book. Then you experience real life and you say, hey, you know what? There's all these little nuances or variances, but I get it. I know how to utilize that information. And that's the power of what we call master trader technical strategies. I hope that helps. Let me know. Any feedback, email me, greg@mastertrader.com.